Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I'm going to welcome you all back. So we're going to get started with our morning analysis. Let me pull up our bias chart, and let's go to the I got to read this comment really quick. We're going to go to the euro dollar, but Thomas is great in his career, a family man, military vet, and he brings his blind cat to bed every night. Hell yeah, I got to go golfing with this guy sometime, get some more insight. That's funny. I am a family man. I I was in the Marine Corps. I was in the infantry. Um, so basically, I was a grunt. And I do carry my blind cat, not to bed, but it's so sad because this cat. I mean, the cat's been with us for we rescued her like 16, 17 years ago off the street. The vet said she was a year or two old and already gave birth once. She had a litter of cats, and she's been a great cat. She's been a great cat. She lost her eyesight like about a month and a half, 2 months ago, and she's lost a lot of weight. So yeah, whenever I'm walking around and she's just kind of waiting for somebody to kind of pick her up and move her around. Poor thing. She's super frail. She's not gonna live much longer, unfortunately. All right, so let's go to the euro. Let's talk about yesterday. So yesterday during the ECB meeting, before the ECB meeting, we were right here. Remember, we were mid-range, and I said, okay, so we're mid-range between 108 and 110. I'm like, if we get a move down to 108, I'm probably not going to be a buyer. And you know what? I wasn't. I didn't buy the euro when it dipped to 108. Instead, I've covered my euro pound short when it got to 108. When the euro dollar got to 108, the thing is it did, and it moved down to 108 and it bounced. We drew this yesterday, right? So I'm going to get rid of those lines because we drew them out. Like I said, I didn't get long the euro yesterday when it dipped to 108. But what was really interesting is this move when we spiked up later in the day back up to 108.90. Almost 109. I shorted the euro at 108.85. I made a quick 15 pips. I got in and out, and I couldn't figure out why the hell that happened. I didn't see any comments. I don't know why that happened, but I did short some here, and then I got out like right here, and so I didn't ride the rest out. So of course, hindsight's always 20/20. So of course, I got to stay in for a while. But regardless, I think the key what our takeaway from this is, and let me remove this really quick, is that really the 108 to 110 levels are holding, right? I mean, they really are. I don't know if this is going to continue to hold here at 108, but what I will say is that I think the risks are the euro continue to drift lower because of what the ECB said yesterday and what Mario Draghi said. In March, they're looking to, if things don't improve, they're looking to do more, and that would probably be buy more assets. And I'm not entirely sure what the hell they're going to buy. I mean, they're going to start, maybe buying like, European. Maybe they could start going in the European antique market. I'm not really too sure what the hell they're going to buy, but they're obviously going to fiddle with their monetary policy if things don't improve. So the risks are that the euro dollar is going to stay heavy. So what does that do for us? Especially for those of us that are not in the euro, aside from the euro Canadian, I have no euro dollar exposure or euro pound exposure, which I closed my euro pound 100 pips ago, which kills me. But anyway, I look at the euro dollar right now and say, well, where do we trade it? I will tell you that on any rally in the euro dollar, I'm a seller, just because of what the ECB said yesterday. Now, where's the euro going to rally? And like today, would I sell it today? I mean, I might. I doubt I'm going to trade today. I think I'm just going to manage what I have currently. But if I was to trade today, I think you can clearly see this is resistance. I mean, that seems to me very clear. Not clear as mud, it's clear as day. You have this previous support here. You actually have that spike high rejection from this morning, and that comes in at 108.60. All right. So 108.60 is near-term intraday resistance. Okay. We are still in a range, big range. As you guys know, it's a big fat range in the euro dollar. All right, so 108.60 intraday is probably going to be some resistance, and maybe even all the way up to 108.70. But that's resistance. Support obviously is going to be the spike low, and you know what I would actually focus on? I would actually focus more on the 786, because you know how the market is, especially on a Friday. We can take out these lows, trip some stops, and then you hit the 786 and bounce. You know, so this to me seems very logical that we drop down to this 108, or excuse me, 107.70 and then bounce from there. I think that's doable today. I don't, you know, I think, you know, from here to here is, you know, I think that's kind of what we're looking at. I'm not even excited about doing anything. The only thing I'm excited about is the Euro Canadian right now, and that's it as far as Euro goes. But for here, you know, 107.70 should offer some intraday support. It's not great support, and nor is 108.60 great resistance. I don't think this is great resistance. I don't think that's great support. So I'm not putting asterisks there. All right, let's go take a look at the cable. Now, of course, I get out of the pound, and it ripped up another 60 pips after I got out of it this morning. I didn't think we were going to hit new highs. I got out of the cable right here. Okay. You guys know the reason why I bought it yesterday. I tweeted the chart, so you guys, you know, knew it. We had a bullish engulfing pattern, so I bought it, and then I realized that for some reason I wasn't long, so I bought it at 142 like 02, and I sold it this morning. Not there. I sold it like, you know, like here, but it's still cruising up. I mean, you know, what a nice reversal in the cable, right? And the shameful thing is I don't have any pound exposure at the moment, and I was totally short the euro pound. I was long the pound dollar, and of course I'm not in it anymore. So crude's hitting new highs. Thank you, Nigel. So of course I'm not, you know, not trading. But where's resistance today? Resistance is going to be huge right here, right where we're at. We're getting close to. Okay, see it? Big resistance right here. I would say it's right there. Well, what's that low? 143.60. Okay, hold on. Let me check something. We can get rid of all these fibs. You knew why I was buying it down there, right? I was buying it because of the weekly 127% extensions that were there, both of them. So now, hold on. There's a 38% retracement. It comes up to 144. So 143.60 to 144. But I'm going to write down 143.60 as resistance. I think that's going to be pretty tough resistance to get through. We're in a bearish trend. You guys understand that we're a bearish trend, but if you're trading long like I was, you're trading counter trend. So take small positions. Don't be aggressive. I mean, I wasn't aggressive. I made some good money, but it wasn't like huge because I wasn't trading really big size going the other direction. So if you're trading on the long side, just keep it small because it is counter trend. All right. Let's go to support. Let's figure out where support is. So support this morning, this is obvious support, very obvious to me, right here. 42.50. Big support. If you get a dip down here, this is where people that are short are going to be looking to cover. So if you get a dip right there, I think that's going to give you an awesome opportunity to be on the long side. 142.50. All right, that should be pretty good support. When I put an asterisk next to support or resistance, that means it's a pretty key level, I think. So if you can get a dip down to 142.50, I think that'd be a great place to get back on the long side this morning. I can't believe I literally got out like right here, and it went, phew, nice. We just hit new highs. Relative strength is not divergent. Higher high in relative strength, higher high in price, so not divergent. So that means it's got some giddy up and go. All right, let's go over to the Swissy. So I bought the Swissy a couple of times yesterday. I bought it a couple of times. And by the way, if you got long the U.S. dollar Swedish krona, I took a loss in that yesterday. Just to let you all know. I thought I looked at it as a false breakout. My only Swiss exposure right now is the Canadian Swiss, which is fine. But man, this thing is strong. Look at how strong this is. Now, you know this is huge resistance around here, because if you go from high to low, 101.20, right where we're at, is the 618, right? So we already tried to do a little false breakout and stop, but now that we're you know, clawing back, I personally, I think this level breaks. That's 101.40. Beyond that, because you have to imagine it's going to break. Oh wait, hold on. All right. Oops, shit, shoot. Okay. So 102 is really next resistance after this. I mean, it really is. So, and it looks good. I mean, we are in a range, but it looks like, you know, we want to push, you know, higher into the range, but, you know, 102 seems very doable. Now, support's pretty easy here, I think. You know, this will hold buyers as long as we can stay above this right there. So as long as we stay above, let's just call it 101 or 1.0090. It's bullish in this range, 1.0090. All right, let's go over to the yen. Here's the yen. This is huge resistance, ginormous. Oh, the dollar Canadian is accelerating lower. I like it. Winner, winner, chicken dinner. Donald, I just glanced up at your comments, and I'll talk about that in a few minutes. Okay. So thanks for the comments. 118.35. Okay, big resistance. We clear that, and we're going much higher. 118.35. And if you guys, and then I'm going to put in 119. So listen, if you guys didn't hear my earlier analysis with Paul Franco, let me go ahead and I'm going to put us back into a range here because of the false breakdown. I'm going to share with you my ideas about the dollar yen and the E-mini futures. Okay, I think the stock market's going to continue to bounce. You guys have, if you were here yesterday, you heard this analysis too. I am looking for a move to 120 yen in the dollar yen. I am very excited about the prospects next week of being short the yen pairs if or when we get to 120. 120 to, you know, 120.50, whatever, this whole yellow box. Okay, I believe that a move up in the dollar yen next week will coincide with a move in the S&P futures. Here, let's go. I'm just going to the continuous, is why I have it drawn out here. I think it's going to coincide with a move in the futures, breaking this downtrend channel back up towards the 618 at, you know, anywhere from 1980 to 2000, which is also the 618 retracement, which is a lot of previous support. Big sell zone up there. So I think that the dollar yen is moving back up towards 120. I think the S&P futures are moving up towards 2,000. Obviously, the dollar yen still got a lot of work to do today, and I don't think it's going up there. I don't think it's going up there today necessarily, but I'm just hoping. I'm hoping the S&P gets up towards 1980. I'm hoping the dollar yen gets up towards 120. And should we get up to those levels, I am looking to buy yen, meaning I'm looking to sell yen pairs, short the euro yen, short the Aussie yen, short the dollar yen, short Canadian yen. You name it. Those are trades that I'm looking to do. Short the Swiss yen. I'm looking to take those trades if we get a bounce in risk. I think we're going to get a good bounce. The S&P did a false breakdown. The dollar yen did a false breakdown, and now we're getting a lift in both of those. So anyway, just a heads up. All right, so going back to the dollar yen, because I don't think we got resistance. Let's figure out where support is today, because if those of you that want to trade it today on some support, if you can find some support, I mean, because this is really, look at how strong that resistance is. I mean, it's really, really strong. So if you can get a dip back down to here, this is probably going to be a great area to be on the long side. Like a dip like right here to 117.80. 117.85, 80, 90, 117.90. That's probably going to be a 117.90. If you can get a dip down to there, that might not be a bad place to be on the long side. Remember, we are and do have, just to refresh your memory, we have a large head and shoulder pattern in the dollar yen. I think that move to 120 yen is going to give us that one last look, to 120 before we actually break down in the head and shoulder pattern. But that's, that's obviously, if you think about that, you're probably thinking maybe over the course of the next, I don't know, couple months. Done. I'm thinking over the next week or two, we bounce back up towards 120, then short, and then, eventually a breakthrough 115 takes us down to 105 type of thing. Okay, let's go over to the Canadian. And I'm going to read Matt's comments really quick. Matt says, really nice trading on the Canadian Bulake, along with the reversal in CAD and the Mexican peso. The ruble we looked at yesterday is well below 80, looking grotesque. Yeah, the ruble definitely is not looking good. It really isn't. The ruble's looking strong. The dollar ruble's looking pretty reversal-ish for sure. All right, so let's, looking at the Canadian, so the Canadian, I'm going to delete a few things and then I'm going to redraw them. Okay, so let's first of all, let me delete some of the intraday stuff. You guys know that we are on support. We just hit the 618 retracement. This is the whole reason why I closed out my, not closed it out, closed part of my dollar Canadian, is we finished this. This is a head and shoulder pattern. It's not the best looking one in the world, but you got your shoulder, head, shoulder, neckline, completion, 618, boom, we're there. Okay, we're on support. I don't think we're going to be selling off any more than this, not ahead of the Canadian data in the next half an hour. Now, if the Canadian data surprises to the upside, which no one is expecting, when I say no one, I mean no one. Everybody's expecting Canadian data to miss all marks, CPI and retail sales. If Canada actually comes in with stronger data and crude oil continues to bounce, we are going down here today probably, like to maybe even to 140. Maybe. I don't know. That's pretty aggressive, but this is support. 140, 150. I know we're there. Doesn't matter. 140, 150. Okay. Below that, I know it might sound a little crazy. Below that is 140, which is the 786. And I know you're probably thinking, holy crap, can we go all the way down there today? Hey, it's possible. Crude oil bounces to 32 bucks today, and the Canadian data is stronger than expected. We'll probably see 140. Okay, so 1.400, or here, I can put in one more zero. 140, 150. Now, let's imagine the data comes in weak, which that's going to be my assumption. My assumption is the data comes in weak. You know, we rally back towards 143. If we can rally back towards 143, actually, let's find a better place. Maybe even 142. Hell, 142.30. There's going to be all sorts of sellers parked out there. 142.30. 230. Okay. And we were in a very bullish trend, right? I say were because I am assuming we're probably going to be going into a range now. That's going to be my assumption. So I'm hesitant to put us back in a bullish trend. I'm very hesitant. Crude oil is going to have to drop back below 30 bucks today for me to slip this back into a bullish trend. So for now we're in a range, but I want to show you something else before I go on break. So let's get rid of this stuff, right? Let's get rid of this. You guys have seen it, so I can get rid of it, right? I can redraw it later, but okay. All right. Now let's go to the weekly candle and let's look. If for some reason crude oil continues to bounce, Canadian data is strong, we drop to 140, we will have a bearish engulfing on the weekly candle in the US dollar Canadian. And those of us that are along the Canadian dollar, if that happens, it has the potential to be a very, very good week next week. All right. It's all potential. I'm not saying anything can happen. I'm not saying it will happen, because anything can happen. But I'm just saying that regardless, even if we closed right here, that's a big red candle. Big red candle. Huge. But the massive unwind is coming, so, and it's starting. So heads up. All right, I'll be back in a few moments. Come back, we'll do the Kiwi, the Aussie dollar index, peso. We'll look at the Nordic currencies. The Norwegian krona is looking strong. Don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So let's get over to the Kiwi. Let's do the Kiwi dollar really quick. Now, the Kiwi, it's really been underperforming today, which is fine. I'm long the Aussie New Zealand, so I'm all about the Kiwi dollar underperforming. But what's really interesting is it's down today with risk appetite as strong as it is. The New Zealand dollar is lower, and we had this. I know we've talked extensively about it this week. We hit the 786 retracement, did a false breakdown, got a hammer, gave us some follow through yesterday, but today it's really interesting. We're struggling here. Now that doesn't mean you should necessarily write off the Kiwi dollar, because the Kiwi is getting a bounce. But you notice previous resistance, current support. Very well mannered. So the good news for the Kiwi, we're still in a range, but that support is pretty key today, 64.75 and then 65.50. Easy peasy. 64.75. 75 is support and 65.50. Right? And we are in a range environment. Let's go take a look at the Aussie dollar. So the Aussie dollar, now this is really interesting, guys. So, oops, sorry guys, I have my screen on pause. Thank you, Ziggy, for alerting me. Thank you everybody else for saying something. Okay, let's go back to the Kiwi. All right, sorry about that. Let's go back reverse. Okay, so here's the Kiwi. I'll just redo this. It takes just a minute. All right, so we had this false breakdown in the Kiwi. All right. We had a false breakdown, 786 retracement, hammer 2 days ago, follow through yesterday, today, stalling. All right. Now, we have fallen to previous resistance, current support. So, like I was saying, easy peasy. Here's support, 64.75, resistance 65.50, 64.75, 65.50. As long as risk continues to be strong, we probably will end up grinding back up towards these highs. But that is 64.75, 65.50. Okay? All right, that's how we got it. Let's go over to the Aussie. And like I said, the Aussie, what's so interesting about the Australian dollar is that we closed the week, okay? We closed the week bearish. Remember that? On Friday, I was a little worried about the Aussie dollar. I mean, I looked at it and I'm like, oh God, you know, and I'm long the Aussie New Zealand, and I'm sitting there going, oh Jesus, you know, not this. I mean, you know, we're actually breaking down. Look at this week. This week, this is very, very, very important. Okay, we won't have a bullish engulfing pattern because the low didn't get lower than last week's low. Okay, it did not. But I'll tell you, a false breakdown in the Aussie on a weekly basis, that's pretty bullish, engulfing pattern or not. So I'm gonna tell you this, guys, and you know, I'm not long the Aussie dollar. I'm not. I mean, I'm long the Aussie New Zealand, but that's my only Australian dollar exposure at the moment. But I'll tell you, if we start breaking above, you know, some of this previous support by the end of the day, man, that's going to be pretty bullish. All right. I mean, because what we're doing is we're going to take out, what we'll do is we'll take out these highs from over here, you know, from over here, and so now you got higher highs, higher lows. That is a higher low, even if it's so small. You know, if we take out like the 70, 60, which is previous support from way over here, yeah, that's going to be really bullish, especially going into a weekend. It's a false breakdown on a weekly chart. Pretty powerful stuff, okay? So 70, 60, pretty key resistance, all right? Now, we already switched from being in a bearish trend back over to a range environment, but man, like I said, if we close the week at the highs, that's a false breakdown. That's a false breakdown, and it's going to be a pretty big move higher, I think. I mean, we could very easily see 72 cents again. I know a couple of you guys are thinking about shorting it. I mean, think about this: if the E-mini futures, do rally to 120 or 1980, and the dollar yen goes to 120 yen, the Aussie dollar, I mean, we could very easily be trading up at 73, 74 cents without any problems. Okay. So before you run out and start shorting the Aussie dollar, just be really careful of the other market forces that are powering the market. Okay. Let's take a look at the well, where's support going to be? I mean, I guess support, it's easy, is right here, right? It's this breakout point because you had that double top and then we broke through it. So now any dip down to 69.60, which was our resistance from yesterday, is going to be bought. 69.60. Okay. I don't like it when everything goes in our range, but you know, it's everything's been shifting. We've gone from bearish to bullish ranges, and bearish to bullish trends, and we've done a lot of shifting this week. So let's go over to the dollar index. There's the ruble, by the way. We're talking about how ugly this ruble looks. Look at this daily candle. Look at the we did the cup and handle. Somebody brought this up to me yesterday. I can't remember right off the top. I'm sure you're listening in who brought this up, and I was like, wow, that's a, cup, handle, breakout, target, hit, reversal, textbook, and a very illiquid market too, which is interesting in itself. All right, DXY. Let's go to the dollar index. So the dollar index Here's your daily. Actually, let's go to the 4-hour. Sorry. Here's your 4-hour. So yesterday we spiked up thanks to the ECB, came down again, not too sure why, but we're making some really good progress here. Very bullish progress for the dollar. Okay, all extremely, constructive is the word I was looking for. All right, let's go over to the hourly chart. So the hourly chart for the dollar index probably, looks like something like this. The spike low overnight took us down to 99.10. So any dip back down towards 99.10, it's probably going to be, a nice buying opportunity for those of you that are looking to buy dollars. And then resistance is going to be the spike high from yesterday. Any which way you slice it's 99.80, which also right. So I actually will write 99.65 because see that high right there, right here. Yeah, 99.65, good resistance. We're in a range, but we're now starting to build a very bullish, build a very bullish wedge. You guys know this. Here, I just take you out to the daily chart so you all can see it. Okay, see these bullish wedges developing longer term in the dollar index. So for those of you that are bearish to the dollar, just be really careful because we're still grinding into this. These are very bullish charts. They are. I know the Fed can start talking down the dollar. I know the Fed can, say, well, we're not going to raise rates, because but that's really too early to identify or to assume yet. Okay. All right. All right. Let's go over to that was the dollar index. Let's take a real quick look at the peso. So the peso thing, I was surprised yesterday when I looked up yesterday and I saw that we broke out here. I was like, holy crap, we're going to hit that 1890. 1890, so you guys all know, that's a 261% extension of the 2012 to 2013 lows. Then the 2015 high to low. It wasn't the low in 2015, but that high to low, 261% extension, all takes us to 1890. Yesterday we went to 1880. I mean, wow. All right, so check it out. Now take a real close look here, and let me delete this. I'm not going to delete this. Actually, let me just take that, and I'm going to do this. You know what? I'm just going to take this. That's what I'm going to do. I'm going to take this one, and I'm going to do this. How important is that support for the peso today? Because you know what? We haven't made a lower low in, a long time. All right. So as long as we can hold above 18, let's call it 1840. All right. It's still bullish, but 18.4000, major support. Okay. It is in a bullish trend. And I know 1880 was the high from yesterday, but 1890 ultimately, it's like it wants it. It's like it's got to have it. Like I'm so hungry. We need it before we complete here. But I don't know if we're going to be able to do it. I mean, we've gone so far so fast. All right, 1840 is major support. For those of you that are, your mouth is watering at the lips looking for shorts. U.S. dollar and Norwegian krona. As long as crude can continue to rally, Norwegian krona has been diverging big time. It has not hit new highs as crude has been down in the 27, 28 level. Okay, that speaks volumes. But you also notice, you also notice, I'm noticing, because I'm short the US dollar Norwegian krona, doing well with it, but we spiked low here. Looks like a false breakdown thus far. 871, 871.50, that's support today. Technical damage has been done. What do I mean by that? Technical damage is we just hit a lower low, and we have a lower high. Do you see that? So the technical damage is being done right now to the Norwegian krona. So now any rally is going to stop short of these highs, because you got people that are now worried that we're making lower highs and lower lows. So now if you get a rally back, sellers are going to emerge all over the place. And I think, if you can get a short here at 886, it's probably going to be a great place. 0.86. It's bullish because the trend is bullish, but it's trying to top, trying to top. And we've got a, you can say it's an ascending wedge if you want. Whatever. It's trying to, it's got a big topping pattern that's trying to do here. All right, let's take a look at the Swedish krona. I bought this and lost money yesterday. I bought it here at 862. It rallied. I thought we were breaking out. I sold it yesterday at like 858, and I said, forget about it. I'm done. I thought we were going to actually start breaking higher, but when the euro bounced from 108 to almost 109, the U.S. dollar Swedish krona said, no. So I'm not even dealing with this currency pair. I tried it yesterday. I tried this little breakout, looking at, thinking that we're going to go up towards the upper end of this range. No dice. So I'm just going to leave it alone. All right, guys. Here's your bias chart. It is done. I know we've done a lot. I haven't been able to answer any questions, so I'm going to go through some questions really quick. Sorry for, I'm not ignoring anybody, obviously. I don't try to do that. It's just, busy analysis this morning.